Hi there, you're watching Your Trades on ET Now with me, Shreyanshi Singh and Priyanka Uppal. And over the next half an hour, we'll help you make sense of the day gone by in trade, and what a day it was, Priyanka, right? Because towards the end of the session, we did see the sentiment soaring. In fact, let's take a look at just that and take a look at the kind of losers and gainers that we had coming in. Now, Nifty, in terms of the kind of levels that you saw coming in at the end of the day, 23,727 is where we shut shop. And in terms of what the top losers then did, you did have metal, PSU Bank, IT, media making it to the list of top laggards in trade. On the flip side, there was the likes of auto as well as FMCG that held on and remained quite resilient, in fact. So let's also take a look at those. Auto on your screen, 0.6% uptick coming in for that one, and FMCG as well, 0.5%, 0.6% thereabout uptick coming in for that one as well, remaining a little bit resilient at this point. In terms of what really happened now, in terms of the broader indices, you did see a mixed move coming in as far as those indices are concerned. So when you take a look at mid cap, that was the one that ended the day in red but marginally so, and small cap was the one that held on to a little bit of strength, outperformed the benchmarks, but mixed move coming in regardless. When you take a look at the kind of gainers and losers, then in terms of the gainers from the auto pack, you do have Tata Motors, Eicher Motors making it to that list. From the FMCG pack as well, Nestle India, Trent, Britannia, all of them making it to that particular list of gainers then. And on the flip side, there was a whole host of these banks, IndusInd Bank, SBI, that were on the back foot, even Axis Bank that went home in the red as well. And when you take a look at the other losers, you do have the likes of Power Grid, even some names from the metal pack, the likes of Tata Steel, JSW Steel also ending the day in the red as well. So that's largely the kind of move that we saw coming in terms of the markets then, and it does look like, Priyanka, the Santa rally has really eluded the
absolutely, Shreyanshi. I think it was all across red, barring 2-3 sectors, but the red color was not what market really wanted. It was a red color because the sentiment was very negative. So Santa certainly has left the town, I think, last week itself. Yes, barring 3 sectors only, if you talk about auto, FMCG and consumption, all other sectors, they ended in red only. We've seen, some particular sectors and stocks surging on news, especially Tata Group stocks. They were on a move today, especially stocks like Tata Investment. There are reports that Tata Capital is soon coming up, is preparing, gearing to list on Indian markets, and that's what Tata Investment hold a significant stake. 2.37% is held by Tata Investment, and hence the surge we saw in Tata Investment. It was up by 11% at one point in time. Later, it paired the gain. And not just one stock. In fact, the entire pack was buzzing and moving today on this particular news. Other than that, even if we talk about city gas distribution stocks like IGL, MGL, GAIL, they were on move today because there are expectation of excise cut in upcoming budget. And on this move only, all the CGD pack was on the move today. Zaggle Prepaid, let's talk about this stock also, because the names from the QIP, which was up by 3% today, closed up with a gain of more than 3% today. Many names came into in the list of the allottees which appeared, and hence it was also in green today. Throughout the day, traded and closed, also managed to close above the green. Because, Shreyanshi, what we saw that if you divide the entire trading session in 2 parts, the first half did saw some recovery and positive momentum, but it's just the later half of the day it started to slip. Now, is this a time correction here to stay for some more time? Because we've seen that Nifty has struggled to close above 23,800, and now expiry, of course, we understand, Thursday's expiry when we come back after a holiday. Rajesh Bhosale is there with us, who's tracking technicals for us to help us understand that what to make of the market at this point in time. Rajesh, tell us, how would you navigate? Because, completely, we've seen that Nifty has struggled to give a close above 23,800. And then, of course, it was a truncated week also. Is there going to be some more consolidation when we come back?
Yeah, hi, good afternoon. So yes, if you see last 2 weeks of December are generally more of a consolidation. And if we see last 2 sessions, Nifty has struggled to cross 23,900 mark. So that is a 200 DMA. So the rest of the month also we expect that somewhere around 23,900 to 24,000 is likely to act as a stiff resistance. And on the downside, 23,500, 23,600 is likely to be base. So we are expecting to market to consolidate within the range of last Friday big bearish candle. So as of now, continue focusing on stock specific opportunities because we have seen that the market breadth was a bit on the positive side. So yes, key indices will consolidate, but we will still have stock-specific opportunities.
Right, so we do still have stock-specific opportunities. So Rajesh, then I guess I'm going to come back to you and ask you about just that. Which are the stocks that you're betting on in this market then?
So if you see during the December month, HPCL had a strong performance. It is up by 8% for the month, and still we are seeing that there are possibility of a further positive momentum. So if you see HPCL, it has given technically a bullish breakout. Also on the derivative front, we are seeing healthy rollovers, and we expect HPCL to perform in the Jan series as well. So HPCL can be bought with a stop loss of 399 and for the target of 435. My second pick is Jubilant Food. The stock has already rallied significantly from the recent lows, but it's in a high top, higher bottom formation where every consolidation is getting bought into. Last week, it was in a consolidation phase, but as soon as market has picked up a bit of strength, Jubilant Food is showing strength. So Jubilant Food is expected to perform well. Jubilant Food can be bought with a stop loss of 670. The target that I'm expecting is 760.
All right. Thanks very much, Rajesh, for that view on the markets, on the index, as well as your two of your recommendations. Moving on, with December delivering scorching returns so far, will the investors see a Santa rally in the last week now? Let me go across to Kunal for this particular insight.
It's a very interesting set of data, Santa Claus rally, and what exactly Santa Claus rally and what is the time frame we are looking out for. It generally starts off with the start of the eve of Christmas. That's on 25th December. So we've taken 24th December as a closing prices, extending that towards the start of the fresh new year. That's 2nd of January. And historically, the data is very positive for the indices. That's Nifty 50. We've looked at the last 10 years of data, and as you can see that from 2014 towards 2023, there have been 10 instances, and out of those 10 instances, 9 instances is where the index has given positive returns. What's very interesting is the last 5-6 years of data, and as you can see that the average returns over the last 5 to 6 years is almost 2 to 2.5%. So which means from the 24th closing, which is a day like today, the Nifty generally gives a returns of almost 1.5 to 2.5% on the positive sides, starting towards the calendar year, a fresh calendar year. What's also interesting is that this it comes at a point where many of the global markets or the scenarios and the news flows across the global markets is generally not considered to be very positive or very optimistic in those last 8 to 10 years. Also, I think the second and the most important part is which sectors they tend to outperform. We've seen FMCG, we've seen IT, and we've seen many of these other so-called defensive sectors. They generally do pretty well for themselves in this kind of a time frame. We've seen banks being one of the better performers in the fag end of the calendar year. So I think on the back of this, we could be at a point where from here on we could be looking at a decent bounce for the index. Even if we go into the average scenario of 2% bounce, we could be looking at least a 500-point rally for the index, which should take the Nifty back above the 24,000 mark.
All right, then that was the update coming in on that all-important Santa Claus rally. But moving on, then time now for some interesting opinion on the markets. Will it be another year of the broader market outperformance then? Or will it be the large caps that finally assume center stage? Here are opinion coming in from Mihir Vora, Shankar Sharma, as well as Gautam Shah.
If we really want to participate in India's growth story in the in the higher growth segments of the economy, then we have no choice but to look at mid caps and small caps, and I think that's what the market's changing.
I am a votary, table thumping believer in small caps. I've been so for many years, and that's worked out fantastically well. Again, that said, caveat is you will in small caps find 30-40%, even 50% loss makers in your portfolio. People worry about losses in small caps. I mean, I say on the 50 you will get right, maybe even 30 you will get right. You're making out like a bandit here. So what's the problem? So my view is when markets fall, small caps fall like 2x the broad market. This is telling you something. The theme on small caps is structural.
Real estate and metals. I think the way DLF has come back, Loader Developers has come back, Shobha has been sustaining. I think real estate is going on to make new lifetime highs and beyond. And metals, I think after all the news flow that we got from China, is just setting up for a move back to lifetime highs. So these two pockets of the market, we remain quite positive.
All right, so there's a varied view coming on the SMIT space, but for sure Shankar has always been bullish on small cap. And let's not forget the maximum earning growth also comes from small and mid cap space only. We say for a short break here, more to come on the other side of the break. Don't go anywhere. Welcome back. You're watching Your Trades on ET Now, and now a special story. Biocon rallies on EU nod for its diabetes as well as weight loss generic. Biocon and its European partner Zentivia have received a decentralized procedure nod in the European Union for their complex formulation. Now, this formulation is used in the treatment of diabetes as well as for weight management. On the back of that, Biocon ended the day with the gains of nearly 5%, 4.5%. In fact, we get you a special conversation with Biocon from our special series ET Now on the Go.
Any timeline, any roadmap about IPO for Biocon Biologics?
Yeah.
Because and also you gave me a number also of how the other businesses that were incubated at Biocon, $1 billion IPO for most of them. Have you all done any study on that also for your company?
Yeah, well, I can tell you this is the most asked question, like you said, but not in the way you asked it, in terms of what is the valuation expected. I think the important thing is, like I told you before, when you go to an IPO, you want to be very clear in terms of what you want to do once you list as a company.
Right.
What is your strategy once you have listed, gone to the market? How do you provide investors with a growth path to say that now I've gotten this infusion of funds into the company, what's the growth story going forward? Mm-hmm. But before you went on to a growth path, as I said, the three-pronged strategy was preserve, consolidate, accelerate. Until you preserved value, which we did, and now you consolidate, which we are doing, you couldn't have gone to the accelerate phase and said that. I think some of the big unlocks that you've seen so far is the fund raise that we did through the bond. And I think that's really good because we no longer have to worry about debt repayment for the next 5 years.
Right.
So the bank loans taken care of. It was very important for us to unlock markets in the US, which we have done with the approval of our sites and the new product launches. So that's the second big unlock. And now we're looking really to see what the growth story should be, which is what we can take to investors who can then place their trust and their funds with us so that we bring it to the market. In terms of the valuation that you asked for, at the last fundraise, we've been several times higher than the previous ones already.
Okay.
So we would look at a larger valuation in terms of what it should be. I wouldn't hazard a guess of what that number would be, but we are very excited about what we have built at Biocon Biologics, and I'm sure our investors and your viewers will see the value in what we are building here.
All right, and there you go. That was the word coming in from the management at Biocon Biologics as part of ET Now on the Go's Bengaluru edition. But moving on, then let's get you the list of stocks that were buzzing away in trade from the likes of Tata Capital as well as Greaves Cotton. In fact, Gaurav is standing by with just that list. Gaurav?
Well, yes, let's begin our list today with Greaves Cotton because one of its wholly owned subsidiaries, Greaves Electric Mobility, has filed for its DRHP for IPO, and according to DRHP, company is going to raise around 1,000 crore rupees. Other than that, pick any of the Tata group of stocks. Those were also buzzing in trade today in the likes of Tata Investment, Tata Motors, and the reason being that, as per reports, the work has started for Tata Capital's $2 billion IPO, and after that, we saw these stocks were also buzzing in trade today. Apart from that, BPCL was also up in trade today, and the reason being that company is going to set up a greenfield refinery in Andhra Pradesh for an investment of 6,100 crore rupees. Gulf Oil was also in focus today because company has now teamed up with Naira Energy to bring premium automotive lubricants across more than 6,500 stores that Naira Energies have. Lastly, Sagility India was also in focus today, and the reason being that JP Morgan initiated with overweight rating and a target price of 54 rupees. What they say is that 50% CAGR growth is what we can see in the company in the next coming few years, and after that we saw the stock was locked in upper circuit. So definitely watching out on all these counters on the back of the positive news flow that we saw throughout the day.
All right, thanks very much, Gaurav, for that entire list of the stock that were buzzing on trade today. But moving on, moving to an ET Now budget exclusive now. Sources tell us that CGDs, city gas distributions, could receive a big relief in the upcoming budget. The Oil Ministry has resubmitted a proposal to reduce central excise duty on CNG. ET Now's Prakash Priyadarshi joins us with more details on this.
Yes, an important development coming in as we are learning from our sources that the government is likely to provide relief to the city gas distribution companies in the upcoming budget. We are given to understand that the Oil Ministry has once again sent a proposal to the Finance Ministry to reduce the central excise duty on CNG. As you were aware that the Oil Ministry had submitted a proposal to the Finance Ministry for the FY25 budget in July this year, which was not considered by the government. But now we are learning from our sources that the Oil Ministry has once again approached the Finance Ministry. In fact, sources are suggesting that the Oil Ministry is seeking a reduction of 5 to 7% in the central excise duty on CNG. Essentially, Ministry wants that the central excise duty should be reduced to 7% from existing 14%. This relief has been sought primarily due to reduced supply of APM gas to this sector, which has been reduced by 20% so far. A very significant development coming in as the industry has approached government for its immediate intervention. Along with that, sources are also informing that the Oil Ministry believes that any reduction in central excise duty will, of course, protect the customer from further price hike. Eventually, that will support the expansion of this sector going forward.
All right, thanks Prakash for that update coming in. So looks like there's some relief that is in store for city gas distribution companies then in the upcoming budget. But moving on then, let's go across to Somi who's standing by with updates on November air traffic data, because when you take a look at the November data, domestic air packs growth was up 12% on a year-on-year basis, and it was Air India's market share in November that was at an 11-month low. Somi is standing by with more details. Somi, tell us a little more about this then.
Well, if you look at the month of November, which is one of the holiday periods for the air traffic and the aviation industry, the air traffic growth was around 11.6% on a YOY basis. Indigo has yet again outperformed the industry. The growth for Indigo was around 15% on a YOY basis, and this was one of the highest growth that Indigo has reported compared to its peers. Apart from that, if you look at in the month of November, the industry had also achieved the milestone of more than 5 lakh domestic travelers on a single day. So that was an important milestone coming in for the aviation industry. Now, when it comes to passenger load factor, which is also a measure of capacity utilization for airline companies, there if you look at Indigo's passenger load factor climbed to around 90% in the month of November, which is the second best performance given by Indigo in the month of November in the last 5 years. Now, and so far if you look at in the month of December, the passenger load factor for Indigo has been on an average around 92%. Also, one of the important points that we should highlight and we should note here is that on the market share front, Indigo's market share has inched up to a record high of 63.6%, while that of Air India has fallen to an 11-month low of around 27.3%. Now, Indigo has improved its market share around 30 basis points on a month-on-month basis, while Air India Group has lost its market share by around 120 basis points on a month-on-month basis. Now, another beneficiary of this loss of market share for Air India is SpiceJet, but SpiceJet's market share has been increasing on a very low base that we had seen. Now, we also need to note that Air India PAC has seen a decline of around 210 basis points in market share from its peak that we had seen back in August, and now currently it's around 27%, and this was the period where they were getting less aircraft supplies from Boeing. Apart from that, integration issues with Vistara and Air India Express might have also led to this drop in market share for Air India PAC. Now, out of this 210 basis points loss of market share that Air India PAC has seen, 130 basis points has gone to Indigo Group, while 80 basis points has gone to SpiceJet. So these are basically what has come in, the key takeaways that we have seen coming in from the air traffic data for the month of November.
We saw the kind of moves you were talking about was reflected in the price also. 4% up Indigo stock was. Thanks very much, Somi. With this, it's a wrap on this edition of Your Trades. Thank you so much for watching and wishing all our viewers a Merry Christmas.